Hola, hola.
How's it, everyone? Welcome back to another episode of Personal Finances.
Yeah. And I'm your boy Maro.
And I'm your man, Richard.
So you're saying there's something wrong with me saying your boy?
No. I mean, obviously, I agree. It also goes back to your personal finances. Yeah, about where your personal finances are. I agree. Sometimes you agree. Look, kasi muna ufitla bare.
Ingamla.
Wanzol. I saw the lever. Ngamla. So it turns out that your personal finances are not yet
they're not yet
on
there.
that level.
Yeah.
So yeah, man, I think today we'll be talking about investing in shares. Right?
Yeah. Investing in equity shares.
Yes.
Yeah.
So one thing sure is there are different kinds of investment that you can make out there, especially when coming to the shares.
Yeah.
So I think just give us a little bit of information when it comes to investing in shares.
Yeah, so please note that anything we say
Yeah.
on this podcast is not financial advice.
Yeah.
If you need financial advice, contact your nearest certified financial planner. We are merely a financial education podcast.
Yes. So what are shares?
So
to start with.
So to start with, I don't wanna go back into the history of where shares emanated, but shares are it's essentially someone holding a particular stake in a company.
Okay.
So there's what there are different classes of shares, and then the shares that are listed on normally, let's say, the JSE or the New York Stock Exchange, as a result of, let's say, a company feeling like it needed to raise some funds.
Okay.
Let's say to sell off 20% of its shares to the public, and then that's when they come and they're like, hey, we're gonna do what is called an IPO, initial public offering. And they would then say, for example, We Buy Cars, he's gonna list or has, by the time we go live, might have already listed, and that is them saying, hey, they did what is called the unbundling from transaction capital, and then they're gonna be a standalone company that is listed.
Oh, okay. So I think in short, it's buying a portion, that specific company.
A little stake in there,
Yeah, I think I've heard of your multi-choice, your your MTN, Vodacom, and so on.
Yeah.
Okay.
Yeah.
So then how does one even get to buy? Like, what do I have to do? Like, and how much do I have to have to buy these shares?
Yeah. So it's just outright, we will have an easy equities referral program out there. So this is just full disclosure. We're not affiliated with them. It's just the one that one of us uses.
Yeah.
So when you need access to shares, you use what is called a broker.
Okay.
A broker is someone who, it's basically almost like a mediator between yourself and the particular stock exchange. It's a platform. So
you get
middleman type of thing, right? So you can buy on that. Like, there's a lot of platforms out there. Easy Equities being one of the popular ones. Standard Bank trading platform. Like all the FNB, all the major banks have platforms that enable you to buy JSE shares, and then on platforms like Easy Equities, you can be able to buy South African, American, as well as Australian shares.
Okay, so if, like, for example, maybe there's someone out there, like they probably have some funds they want to grow, understand?
Yeah.
But Havana an idea of how much these shares would go
cost.
for, understand? So at minimum, how much does one have to have?
Yeah, so at minimum, it also just depends on the particular broker.
Okay,
For
okay,
example, on easy equities, you can buy from I think 1 rand or 5 rand or so.
okay.
So as little as what the evolution before you needed a full amount to buy a particular company share. So if Nespas at the time was probably selling for like 500, you needed 500 or 2000 to buy one Nespas share. So you needed the full amount. So right now, there is what we call fractional share buying, where you can buy a portion of a share. So that would to say that if a particular company share is, for example, even with American stocks, you can have a stock that is like $2,000, but
Yeah,
sitting
yeah,
in
yeah.
South Africa, you can buy with like little amounts of money those type of stocks.
Okay,
So
let's
which is a good thing.
okay, let's say then in that instance, maybe get regulate the shares,
Mm-hmm.
Let's say I don't know how many shares, but I don't spendile maybe about 10,000 on those particular shares.
Mm-hmm, mm-hmm.
So then later, let's say after maybe 2 years or 3 years, then I decide or no, I want to cash out.
Yeah.
So is that possible?
Yeah, that's possible. And what that this is one of the things that I love about investing in shares is that you don't have your money held up somewhere. Like immediately when you need it, depending on the conditions of the broker, you can say, "Hey, I owned 10,000 worth of shares of MTN, and I want my money." And what you would then do is, go onto the app and say I'm selling my shares,
Okay.
and then whereas as soon as they are sold, especially within the period of trading. So
So
most stock markets would,
yeah.
let's say, start from 9 a.m. and close at like 5 p.m., which is
Okay.
a time. So if you sell within that time, you can then sell. And then depending on the condition of your broker, some brokers can say if you requested your money before 1 o'clock or 2 o'clock, we give it to you. Then you would have sold, and then they give it to you.
Then all these shares, how do I then know if whether like my money is literally growing?
So most trading platforms would have what is called losses and gains. So let's say you would have
Also, it's easier for me to track.
to see you. Okay, I
Okay.
put 100 rand in this one, and today I was able to gain 1%, and therefore I have 101.
Okay.
Like
Okay.
when you watch the news or business news, and then there's that line that comes and they show
The
green and
market
the
share
market,
went up,
and
down.
yeah. So those are the things that would then show that a particular company on that day
So so
has either
so
went up or down.
so then when is the best time to cash out? Because I mean, obviously the inflation and everything.
Yeah.
Like when do I then? Let's say maybe I want to cash out. Like
Mm-hmm.
when do I then cash out?
Yeah, so there are different principles out there, but the basic one is always buy low and sell high.
Yeah.
So when let's say you bought a share when a company was trading at 90 rands, and depending on the news and then the appetite of the
Yeah.
market, then the share price then go up to like 120. You are better off
Selling
selling
the
when it's at 120 as opposed to when it's at
selling when it's
80.
80 or
At
70.
80. Yeah.
Okay. No, I think that makes sense. So clearly, I mean, obviously, I think these obviously they are determined by, you know, things that are currently happening in our
Yeah.
economy and all things that are happening in our
Yeah,
country, right?
the news, so there's what is called a sense.
Yeah.
That's where the different companies release news to say,
Okay.
hey, this is what is happening, and therefore as a company we are doing this. So listed companies are obliged to announce when they are taking certain decisions because they are public companies.
I think I've also seen something like that on Bloomberg, right?
Yeah, so on platforms like Bloomberg, you would have news and things like that, and therefore, for the fact that those companies are then obliged to do that, for the fact that they are doing that, therefore that will mean that different people will decide. So if a company says, hey, we are retrenching, since the market might say, hey, Gary, there's something happening, we want our money, and the more people sell that stock, the more the price of the stock goes down. The more people want, it's a supply and demand thing.
Okay. So I think then let's touch on this one. Obviously we have these options when it comes to most of our banks. No, you can fix your money, it'll grow. So what is the difference with me taking my money and fixing it, go bank, and me buying shares?
So the difference is huge, right? So if you go and fix your money, and then the emphasis there being on fix. So that means you are getting into an agreement with the bank that I am giving you my 10,000, and I want a 10% at the end of 12 months, for example, and therefore they are going to, if you put it on the 1st of April, they are going to give you 11,000 at the end of
the following the year.
So at let's say at the 31st of April 25 of March, sorry. So the difference there is with shares, and also with the bank, depending on what kind of interest you have, once you have agreed, that is the amount you're gonna get. Whereas with shares, I can take my 10,000 and buy a stock that was selling for 100 rand, and then I'll get 100 of those shares, and those shares can go up, let's say, by 80%. So then I can get 18,000 from my 10,000, and you would have gotten your 11,000. However, there's also considerations to say that with stocks, there's also a possibility that it might go down. So
there are risks.
Yes, my 10,000 can also be an 8,000 if the price of the stock went down. So it's also a matter of considering, what is your risk appetite.
Okay, so with the bank, I am guaranteed that amount. That at the end of this 12 months, I'm getting that extra 1,000 from my 10,000, right?
Yeah, if it is not interest rate linked. So if, for example, some products would be interest rate linked, and therefore when the governor of the Reserve Bank, Mr. Lesetja Kganyago, announces that, hey, interest rates are going down, then the banks can also say, hey, this particular product, Nati, we are going down. So it just depends, but pretty much some products are like guaranteed 10%, no matter what happens.
So I think obviously, there are other people out there that have more deep knowledge with regards to all these shares and stuff like that. I think also what you guys can do is give us some tips with regards to shares on our page. It's Micampus Finance. You can just give us some tips and so on. And also, if you're out there and you need more information with regards to personal finances and shares, you can also drop us a text and so on our page. And we'll give you more information with regards to all these different types of shares.
I mean, and also there might be people out there with a lot of knowledge and everything. So once they come and they have that knowledge and they are able to share it with you. So that's what they would be able to have.
I think we've covered enough for today. So guys, let's continue the conversation on our social media platforms. And
cheers everyone. Consider different types of shares out there, consider different types of investments out there, And let us know what are your 5 favorite stocks or shares that you've bought that have made you some amount of money. So let's continue educating you on the different types of shares.
See you then, guys.
Cheers.